Whether you're new to investing or an experienced investor, we're probably pretty all well aware that the bank stocks have been hit pretty hard with the COVID crisis. 3 of the bank stocks that I own in my portfolio had their earnings calls this week, and I also got 1 dividend from a financial institution. I thought this would be a great time to do a portfolio update focusing just on the financial institutions in my portfolio. What I'm not going to do is a stock analysis on the companies that I'm going to talk about. I'm not a financial advisor. I can't tell you what to do. If you are looking for someone to tell you what to do though, I will tell you to subscribe to my channel. Please, here at Champagne Sense, I make a lot of fun videos on investing and budgeting, and also share a lot of my personal money moves that hopefully can inspire you. Disclaimer for the math wizards out there, but when I am going through my personal performance with these stocks, I am looking at some fluctuating prices. I am looking at 2 portfolios, E-Trade and Robinhood. I am looking at the end of day stock price and also after market prices. So when I was adding up these numbers, I also noticed the discrepancies. So just humor me, they're only different a little bit, but I'm pulling from a couple different sources and it is what it is. It's gonna come as no surprise to most of you that there's a lot of red in my bank stocks. I buy and hold, I am looking at dividend consistency, I am looking at long-term investing. So as I've said before, I really wanna normalize seeing red in your portfolio. It's not something that's desirable, but I know that I'm in it for the long haul. If you're not aware of what I'm talking about with the earnings calls, the company has their executives get together to have a public conference call, really. Anyone can attend. Usually the shareholders will come and other companies that invest in them, and they go over their quarterly results. Sometimes they'll go over year end or different segments of time, but typically what you'll see is an earnings call for the quarter. The CEO will usually cover their financial performance and other things going on in the company, the market conditions, what they're experiencing with their customer base. And this is a great time to get some learnings to find out if you want to invest in that company. I'm not going to delay, I'm going to cut right to the chase because the biggest news this week is what came from Wells Fargo. Wells Fargo is one of my favorites. If you've watched my other videos, you've seen me invest money in them. But unfortunately, this week, they told us that their second quarter performance was worse than any of us expected. They actually had their first loss since the 2008 financial crisis. Now, I did not listen to the call personally, but I read a lot of articles that kind of summarized what was covered in them, and there were 2 factors why this is that really stood out in my mind. We know that the government gave some stimulus money out to individuals and companies, and Wells Fargo did receive funds for payment protection loans. A couple days ago, they reported that the $400 million in processing fees they generated from these loans, they were going to donate to nonprofit organizations helping small businesses recover from COVID. Now, you might feel all warm and fuzzy after hearing that because, oh, how nice, that's so sweet, they're helping others. The other factor is that Wells Fargo is still paying penalties that they received a couple years ago for abusing their customers. And this has had a significant impact to their profits. Now, why should you care about any of this? If you want to buy and hold for the long term, why does any of this matter to you today? Well, they did announce, and it was painful, that they are going to cut dividends by 80%. They are the first bank to announce a dividend cut. They may not be the last. I am hoping that they are, but they are the first one to cut their dividends, and that was a lot more significant than anybody really expected. My shares of Wells Fargo with the ticker symbol WFC, I hold in my E-Trade portfolio. I purchased my Wells Fargo shares at an average price of $30.36. Unfortunately, the current price is $25.40. Overall, what this means to me, if I were to sell all of it right now, I would have a loss of $173.08. But I'm not gonna do that. I'm not gonna sell when it's at a dip. This dividend cut of 80% really breaks my heart. They have been a good dividend payer for me. Since I started investing with Wells Fargo this year, I have been paid $9.18 in dividends. You'll see in this 1 year performance that they had the Corona crash and they have not yet recovered, which is pretty much what I just said that I learned from the earnings call. For the past year, the stock price has decreased 45.63%. Now, before you X out of this video because you've already made the decision that banks are a horrible investment, stick with me because JP Morgan Chase is a little bit more positive. They beat analyst expectations and reported a profit of $4.7 billion. Along with most banks, they are expecting an increase of defaulted loans. So they set aside $10.5 billion for potential loan loss. This is larger than any of their other quarterly provisions, and that includes during the Great Recession. They have a much stronger corporate and investment bank division compared to Wells Fargo, and that's really what is driving a lot of their profit. The CEO said that JP Morgan Chase is preparing for more impact from the COVID situation. We will see a full effect from this recession soon, just not right away due to the stimulus payments. They did have some good news, and that was that they think their dividend payments are sustainable. So I don't expect that they will be cutting them anytime soon. I have JP Morgan Chase in both of my dividend portfolios, Robinhood and E-Trade. For Robinhood, I purchased JP Morgan Chase for an average price of $91.62. With E-Trade, $110.27. The current price is $99.75. In Robinhood, I have a gain of $32.53. I don't have that many shares in there, but I wish I did because with E-Trade, I currently have a loss of $113. I have received $13.50 in dividends from JP Morgan Chase. And here we can see that over the past year, their stock price has gone down 12%. Not great, but still looking a lot better than that Wells Fargo loss of 45%. Next up is Bank of America. They reported lower revenue this year compared to the same time period last year. However, they still beat analyst expectations both on earnings per share and revenue. Much like JP Morgan Chase, a significant factor for them was a higher than normal loan loss provision. For Bank of America, it was 6 times larger than the amount they set aside last year. Unlike Wells Fargo, Bank of America has a large trading division, and this is what drove a lot of their profits because it saw an 81% increase in net profit. Investing is just the cool thing to do, I thought you knew. Once again, I own Bank of America in both of my dividend trading platforms. The average price I paid with Robinhood for Bank of America was $28.70. With E-Trade, $25.18. Neither of those are awesome since the current price today was $23.88. That results in a loss in both portfolios, with Robinhood $38.82 and $17.70 with E-Trade. Dividends have been smaller for me, $5.59. For their stock price performance over the past year, it looks pretty similar to the other two banks, and they've had a loss of 18%. I've often talked about diversification and investing in areas outside of your home country. The Bank of Nova Scotia is located in Canada, and this was what I had in mind when I started investing in them. With Robinhood, my average purchase price for my shares is $43.30. Recently, I also purchased a bunch of shares on my E-Trade portfolio at $40, which is exciting because now it's up to $42.08. Big win! Okay, not really, because on Robinhood for Bank of Nova Scotia, I have a loss of $15.92. So that doesn't offset my $12.48 gain with E-Trade. But what's really cool about BNS is the dividend payment schedule and the months that they pay out. They're off months for me that I needed a little bit more income. My goal is to get dividends every month and as even as possible, so one day I can retire early and still have income coming in. The 1 year performance is a little bit scary and you see a loss of 21%. The last one on my list isn't technically a bank, I don't think, but I still categorize it as a financial institution, and that is Main Street Capital with the ticker MAIN. They make loans to small businesses, so I kind of think it still fits in this category. I have purchased shares of Maine at an average price of $32.06. Currently, they're at $31.94, so that loss isn't too bad. I'm not going to despair over the lost 96 cents, nor am I going to sell and exit this position and lock in my dollar loss. I've gotten $6.39 in dividends, and what's cool about Maine is they pay their dividends monthly. So although it's only like $1 and some change each time, I still love getting that notification every month. Their performance over the past year has been a little bit scary. As you can see, a 25% loss in their stock price over the past 12 months. Those are my bank stocks, and the industry has been hit pretty hard with what's going on right now, so I'm not too surprised to see all the red. It also doesn't help that I started my dividend investing at the worst possible time. Most of my money got invested in these financial institutions in February 2020, right before COVID hit the market. I may not be investing as much in these institutions right now, although you could argue that now is the perfect time because they are at a low and more of a value. And as long as they don't take on too much debt, as long as they don't have too much of a loss, you might see a good value, and this might be a great entry point for you. I don't know, I'm not a financial advisor. Again, I'm not gonna tell you what to do. It's just a couple different ways to look at it. I will say that in 2008, banks were also hit really hard, and they did recover from that. So I personally am not cashing out, and I am looking for opportunities to maybe add a little bit more money. I just don't know if this is going to be my focus for the bulk of my investments over the upcoming months. I am curious to hear from you if you think now is a good time to invest in the banks, and which particular ones. Let me know in the comments down below, because I'm dying to see what the opinion is of these banks. Thanks for watching. Have champagne sense, and I'll see you in the comments.